welcome once again on behalf of myself, Annemarie van der Merwe, and Frank Landman, from the Stellenbosch Graduate Institute, and myself from Vloot-Rock, to what I think is going to be our final Directors Hour for 2020. And thank you for those of you that have been regular participants and attendees to our events through the year. It really was just an idea that came very suddenly overnight, and we started, and I'm hoping that you, as those of you that attended more than one of our events, got as much pleasure and value out of it that all of us did as well on this side. So I'm going to today's topic, and probably we're ending, I think, on quite a high note, and a very topical issue around stakeholder activism, shareholder activism. And, you know, this whole issue around being targeted by activist stakeholders. I was referring the other day to the book that I've recently started reading, Barbarians in the Boardroom, written by the award-winning journalist Owen Walker. And in the side note on this book, it talks about the fact that activist investors have sent shockwaves through corporations as they tirelessly target individual directors and executives at some of the world's largest companies, and that they no longer prepared or willing to just operate on the fringes of business, but that they are firmly getting into the boardroom. So globally, we are seeing more and more of a stakeholder activism. We're seeing very real actions from institutional investors. Locally, we've seen a few ourselves as well, and especially on the shareholder side, just in 2020, you know, some of the, in 2019, Steinhoff matters in court, the Capitec Bank, where two of the minority shareholders took action against the board of directors of Capitec. Very recently, Mrs. De Bie, the retired widower who started an action against the Steinhoff directors and a number of the Steinhoff companies to hopefully get the certificate and to get the door open to a class action of shareholders against the Steinhoff individuals and Steinhoff entities. So what we're also seeing is that different stakeholders like environmental lobby groups actually acquiring shares to get into the platforms that you would typically find the shareholders, your AGMs, etc. So I think ESG has become quite a hot topic everywhere, being bandied around, and institutional investors all now having ESG departments, etc. So it is a very real issue. I think it's something we definitely cannot ignore, not globally and definitely also not locally. We're very privileged today, I think, to have a very, very seasoned individual that's going to talk to us on this topic, Jacques De Bie, who not only spent, I think, nearly 15 years in the UK in this environment as the marketing director for Standard & Poor's Structured Finance Credit Ratings, and in a number of other entities as well, coming back to South Africa, I think, in 2005. And being also a partner at what was formerly known as College Hill from 2006 to 2013. Currently, Jacques heads up the outsourced division of Singular Systems. Jacques also, deals with investors and shareholder activists, but also more generally stakeholder activists. I think you mentioned, Jacques, the other day in, for example, the coal and the mining sector, etc. So with all of that hands-on practical experience on this topic of shareholder and stakeholder activism, I'm really looking forward to listening to you, and I'm going to hand over to you. Thank you.
Thank you very much, Annemarie, and thank you very much to Vloot-Rock and the Graduate Institute. And I feel privileged to be part of this webinar, and I want to make it as interactive as possible I don't profess to be an absolute expert and to know everything about shareholder activism. I have been exposed to a lot of it, but I'm also very keen to hear from everybody on this call and to take the questions and to see if we can learn something from it. I have a very short presentation which I will run through. It's about 3 or 4 slides, and that will give us some sort of themes and potential topics for some Q&A a bit later on. So just briefly to expand upon my background, yes, and thank you for that intro, Anna-Marie. I was a director and the head of marketing for structured finance S&P credit ratings. That exposed me to a lot of very active investors across Europe. One of the things that I noticed immediately from returning to South Africa is that the activism in Europe is far more extreme as it is in the US. I mean, you get movements such as the Extinction Movement that chains themselves to buildings, throws red paint and blood on the walls. They appear in the Grim Reaper suits at AGMs, and they use very extreme tactics. Thankfully, we haven't seen that yet. It's activism here is still relatively traditional activism and not as extreme. South African activism has come off a very low base. I think most of us on this call will at one point or another have been exposed to Theo Botha arriving and asking some very prickly questions. And he was kind of like the Lone Ranger and a voice in the wilderness for many years. But since the Steinhoff and the global financial crisis, things have really changed. And there's a lot of collective activism as well as individual activism. And under the collective activism, we're also talking about NGOs that focus on climate change, environmental issues, etc. So the market has changed dramatically. I'm just going to run through a few points on that presentation. If I can just go to that. Okay. Is that coming through okay?
It is, yes. Thanks, Jacques. We can see your screen.
Okay. Right. So just broadly, there are 2 real broad groups of shareholder activists. The first broad group is what we can generally term the governance activists. These are activists that seek to challenge policies around governance, remuneration. There's a theme of challenging remuneration policies and the metrics and the disclosures around that. That's very big in South Africa. And then there's a big movement, as Anna-Marie mentioned, especially in the fossil fuel sectors, the coal, the oil, and the gas, around ESG, environmental and social and governance types issues. That is the one broad class of shareholder activists. The second is what I refer to as economic or performance activists. And really what they want is a better return, better economic scenarios and returns on their investment. Under this, I would classify the hedge funds. And there are a few specialist hedge funds that are very active in applying activist tactics, but there are not many local activist funds. I know that Signia was going to set one up about a year or so ago, but I don't think that they've quite managed to actually launch that. I could be wrong. But under this hedge fund type activism, we see the likes of a Viceroy or an Arcam or a 36ONE in the local context. And what they generally tend to do is they tend to find a weakness. They analyze the company, they find a weakness, and then they try and exploit that weakness. And they apply sometimes overly aggressive tactics. In general, though, I think that activism is quite a scary concept for a lot of traditional conservatively run companies where the boards have done things in a certain way and they're very comfortable with what they're doing and how they're doing it. It's not easy for that company to suddenly be faced with activist investors who have a real pointed agenda. And often the initial knee-jerk reaction lands them in a little bit more of a pickle than it should, because it's often a quick legal, or the company secretary is directed to shut out the activists or to channel them into a position of muting them and silencing them, as we saw at the Sasol AGM last year. That is not how most advisors would suggest that companies deal with activists, because just because you're shutting out the questions doesn't mean that question has gone away or that issue has gone away. And activists find very clever ways of coming back and posing those questions and forcing the issues. So those are the two broad categories. I thought it would be interesting to just sort of outline in very briefly what shareholder activists or stakeholder activists really want. In a shareholder sense, there's really three broad categories again. I mean, strategic or management type changes. Activists often want to get a change on the executive or a change on the board, to change the directive to align with different policies, to change the policies. Either they want to break up the company, or they want to sell a division, or they want to sell the whole company. Or they decide they don't want to sell the division, or they don't want to sell the company, and there may be an M&A arbitrage. Aligning the pay for performance is a very keen theme and is covered in most AGMs. I think most of you will be familiar with the points on the agenda of most AGMs where you have to get the approval on the advisory note around remuneration for execs and non-execs, and then you have to implement those policies, and it's mandatory to engage with investors to get input. So that is a very key theme, and we can talk a little bit more around that. Then on the financial side, I mean, there's a range of themes there. A key theme, especially during COVID, is on dividends and capital allocation. It's a key theme to the way that the company allocates its capital and manages its investments, and the allocation of capital for particular return rates. Shareholder activists are keenly focused on that and on the dividends. Now, it's a key theme that they often used to be only focused on returning capital to the shareholders, to themselves. And now during COVID, there's been a shift, and the opposite is also true. So, companies need to conserve their cash, to not pay the dividends so that they can sustain their long-term strategy. De-gearing, gearing up the balance sheet, and M&A arbitrage are often key themes and hot topics. We can talk about that if you would like to. ESG is a personal favorite of mine, and something that is rising extremely fast, and it's becoming extremely significant in the South African landscape. Especially my experience in the investor relations world here in South Africa is focused on the mining and the diversified industrial side. I advise a number of coal companies, and in the coal space, the anti-coal movement and the just transition to a clean or green economy is rising rapidly. And if those companies do not yet have an ESG strategy to engage with shareholders, then they're behind the curve and they should really be thinking about that. Other topics along the same vein are health, the health of the workforce, the health of communities, green energy, the transition. And there is a lobby group in South Africa called Just Share, which has done amazing things, I believe, in South African the investor landscape. So it's an NGO, and it tends to focus on the governance issues and a lot around the climate and just transition, especially in the mining space. And then there's obviously broader stakeholder concerns around mining and the big companies. The communities that they work in sometimes become very frustrated. They protest. Health issues have always been an issue in the mining world. And these are stakeholder concerns where the labor force and the communities that work at those companies start to protest. And very quickly that can turn quite nasty and ugly. And then we get people's health and safety and even possibly fatalities. So that's a subject that we could potentially talk about more. I thought the next slide is a slide that I usually present during investor relations training. And the reason why I thought it would be good to put up here is because it compares and contrasts the two sides of the company or the issuer and what they want from the market and from the investors, and then the investors and what they really want. And you can see along the left-hand column there, the company wants access to capital, the investors want the return on their investment, a fair rating or a fair valuation, and good disclosure so that they can make that valuation and that investment decision. Support for management is often what the team wants. What the investors are looking for is leadership and depth of leadership, sustainable leadership, succession, etc. Share price appreciation, of course, the company wants its share price to appreciate. And sometimes investors want more.
Jacques,
yes.
Can we interrupt you just to say your slides have not moved, so maybe you just need to click on the slides again to make sure that it actually moves on our side.
Sorry.
Okay, let's just thank you. Thank you. We're on the slide, what do shareholder activists want? They typically seek to.
Okay.
That was probably your previous slide that you were talking to.
Sorry, thank you, Anna-Marie. I didn't realize that wasn't coming through.
Okay, no problem.
All right, so I'll just close off on this slide. Sorry that you are having to catch up. I think you can read that now. So I will just say that the company wants the investors targeted and profiled, and what the investors want is what is the value proposition that the company is presenting to the market so that I can make an investment decision. The sell side, the research analysts, the broader the sell side coverage, usually there is a premium that is placed on the share price, and what the investors want is then the good corporate governance and transparency. The topics for today, I put there 4 broad topics, and I think that I'm looking forward to some of the questions. I would say please don't limit them to these themes. The rise of shareholder activism in South Africa, the who, why, and how. We've seen a dramatic change in trajectory right up the curve. Since Steinhoff, since 2016, I remember writing an article for the Business Day on the tactics that the American third point type activists use in the States, where they launch a campaign by first trying to engage with the company. If the company is, and they build up a stake in the company, then they send a letter to the board, and then they publish that letter as an open published letter for the investment market to see. and then they start going more aggressive if they don't get the engagement that they seek. That article I wrote in 2016, and it was about 9 months after they published that article that we saw the Viceroy entry into the market, and they were going for the Nepi Rockcastle property sector, and saying that there was a whole lot of things there that were involved. And then they went on to Steinhoff, and then they went on to Capitec. And the exact same tactics that they had used abroad were now suddenly in South Africa and playing out across the market. We could talk about individuals in South Africa, people like Chris Logan, as well as what is happening at the big institutional funds. They have policies, they have desks, they have heads of ESG who are very active and have stewardship codes, etc. The style and the tactics, and then the role, I think particularly interesting for this conversation is the role of the COSEC, the lawyers, the legal advisors, the investor relations consultants, etc., and how they can play a role in managing and engaging with shareholder activists. My particular view is that we probably needed more shareholder activism to rise, and we probably need more shareholder activism in the country, because it's not all negative, and there's ways of doing it that can produce constructive outcomes, but we can chat about that. What does a company need to do, and how can they prepare for any potential activism, and what should they not do when that activist finally tries to engage with them? And then broadly speaking, especially around the mining sector, I'm very keen to talk about that because of my exposure, but we could talk about some of the sort of more recent ESG type dynamics in the coal market in South Africa that are playing out versus the reliance and dependence on coal for power in this country. It's a very interesting dynamic. So those are 4 sort of general themes, Anna-Marie, and I think that I could hand back to you now to see where we could go from here.
Thanks for that, Jacques. I think, yes, let's leave this slide up, and then we can use this as a bit of a framework. If you go back to your previous slide, so that we use that as a bit of a framework. I see comments are starting to come through. We will make the recording available, and obviously the presentation will be on that as well. But Jacques, so let's get a little bit practical and talk a little bit about, especially how I must tell you that I'm testing your views on this, and I'm then going to also ask Frick to come in. In my experience, although many companies and boards have, they've become quite used to the language and the terminology of stakeholders, I do still find very little time and airtime is actually given in the boardroom around what is our strategy around our different stakeholders, and especially the conversation about what are their legitimate interests. They do have legitimate interests. Do we understand what those are? How do we meet those legitimate interests, in a way that's also of benefit to the company? And the long-term sustainability of the business as well. And then to say, so if we understand that universe, now how do we engage? I think my perception, we still seem to be very reactive as boards than rather proactive. And that is a concern, that I in particular have. So I'd love to hear your views, and then also ask Frick to join us in the conversation.
Can I just add to what Anna-Marie is asking, because Anna-Marie, you're the expert on this, but if I read King 4 correctly, it actually promotes a inclusive stakeholder approach, and one would almost expect then contrary to what you are saying, that boards would proactively design such an approach.
Yes.
Yeah. Jacques, your
Yes.
views?
Yes, thank you. Two very good points. So my view is that it's very difficult for a board that is dominated by a very powerful chairman, who has a great deal of influence over the company and the board, to change the ways that the board have traditionally run. And a lot of the companies that I've seen do initially have a knee-jerk reaction to activists. So I think that the company secretary has a role to play here. And we've seen a number of good examples of how the company secretary can help to engage. And I would say that, what the company secretary should potentially think to do and consider is getting the help of an investor relations advisor or consultant, because the investor relations people are dealing with the investors typically a lot more and sustainably and on a daily basis, and often can find a balance that can be more constructive and lead to more constructive outcomes. What you find often happens, and it's very difficult for a company secretary to advise against a very powerful chairman, to say, you should listen to these people because they do have a point. But the initial response is often, we want to shut them up, we want to limit them to very little airtime, and we want to kind of block them out and control them and put them in a box. And we saw that at the Standard Bank AGMs over the last 2 years have not played out well for the company in terms of how they dealt with the shareholder activists and Just Share in particular. I would say another thing that is really worthwhile for companies to consider is that shareholder activists really come with a brand new or novel idea. Most of the companies have already considered, the suggestions that shareholder activists come with. So they should have a policy, and they should revisit those policies and those decisions, and they should do scenario planning, because it's very seldom that the shareholder activists think, of something completely new that the company has never considered. So if a company is doing what it should be doing and understanding its business and the markets that it operates in, it already has a lot of those answers and considerations. So it should revise them, it should practice them, run scenario planning, and it should provide time at least every year or twice a year to consider these things. The third thing is that the company, especially the listed company, and I'm not an expert in the unlisted space, but on listed companies, they should really keep a very close tab of the investor sentiment and the investor register. So I'm quite lucky because I work with a division who does that as one of their special niche capabilities, and can analyze both at a nominee level and the fund manager level, as well as at the beneficial owner level, where the voting rights reside. So that register can change, and you can get a predatory stake that is built up by stealth over time, and that is what shareholder activists do. They target the block shareholders, and once they get them on side, they can then wield power over the company. So the company needs to keep a close eye on its register, and if names well-known activists appear in that register, then that's obviously a flag. The final thing that I would like to say, Anna-Marie, is that, you know, it's not just the executives that need to be involved. The non-executives play a key role in engaging, especially when it comes to remuneration and when it comes to health and safety, social and ethics. The chair people of these committees are vital in terms of engaging with the ESG analysts at the Coronations, Alan Gray, Old Mutual, etc. So your strategy as a company, it should involve the company secretary, the investor relations or corporate affairs or stakeholder affairs executive, as well as the relevant non-executives on the board. And that's where I think South African companies really need to catch up, because that's where the real value lies, in deploying the skills on their board. And that's what the investors want and need. So that's my view, and I think that you know, there are a few companies who are doing this, and they're doing it well. I think that South Africa is behind and needs to catch up. I have a friend who runs a consultancy in Europe, and he specializes. They specialize in the corporate governance side of things, and they consult all over Europe in all the different capital markets. And they basically have more work than they can cope with, you know, advising companies on how to improve their governance structures and their engagement with shareholders. So I'll pause there, and I don't know if there's any follow-up questions, but those are 4 points that I thought were worth sharing with the team.
Thanks, Jacques. Quite valuable. I'm going to ask Frick to just pose a question, and then I'll come back to also raise something.
So our guests have got 3 questions here at the moment, Jacques. The one is that if a company that is actively encouraging shareholder input and criticism, do they get a better perception in the marketplace? Are they better perceived in the marketplace? That's the one. The other question is, what is the optimal design for ESG disclosures? And then the third question that is coming in is, why is shareholder activism mostly confined to issues of governance and financial performance, and not to other issues that are important in running the entities? So I'm not entirely sure what the other issues are, but those are the 3 that came in, Jacques.
Okay. Thank you, Frick. Yeah. What is the perception of those companies who have engaged? Really, I think, I mean, my response to that is it depends entirely on how they engaged. You know, I think the Standard Bank case study is pertinent. They invited Just Share to post a resolution for voting on a shareholder matter around conflict of interests and the directors being reappointed and appointed. And at first, you know, that was tabled, and then a long period of silence, and then suddenly the heavy-hitting legal reaction saying not a shareholder matter, and you know, you've got no rights to table a resolution like this. And then it became very prickly. So the perception was, in my opinion, very negative in the way that they, in the outcome of that. One of the 3 directors decided not to join as a new joiner. I don't know if that was directly as a result, but it revolved around the issue of Standard Bank being a major, I think, the biggest lender into the oil and gas sector, and having several directors on the board that were directly exposed to the oil and gas sector. So it wasn't a moral judgment or an ethical type of judgment. It was a question around how does the board deal with it, and there are remedies. And I think if they had chosen that remedial route and engaged without the heavy size 12 legal boots, I think they would have had a much better perception. So I think and then on the converse, I think that, if you look at a company like, I'll mention Exxaro. Exxaro is the biggest coal producer in South Africa, and they have proactively engaged with their shareholders, both locally and offshore in the States, in Europe, etc., to understand what their positions are and how they see the investment in coal, because there's a very anti-coal sentiment, especially out of Australia and the Nordic countries, and in America as well. So they have proactively designed engagement strategies and have progressed those. And the result has been, favorable. Yes, it's a long way to go. It's going to take many, many years, especially because, you can't switch coal off when it's 95% of the electricity is generated from coal. And investors need to understand this, and it's give and take, and it's sharing of information. It's not antagonistic. So I think that is my view on the perception of the companies. And, it's a key question, because especially in European shareholder activism, the specialist advisors do very specific perception reporting. Now, that's another thing that I'm quite passionate about. And we do perception reporting at Singular. And it's a quantitative as well as a qualitative perception report that gives management a tool to gauge. It's like a temperature gauge of what the priorities for the company are and what the priorities and hot points for the investors are. And I think these are tools that should be used and deployed more in the South African landscape. They are deployed and used in the US and European markets to a great extent. The second question, I've sort of touched on that. What is the optimal design and how best to disclose ESG type disclosures? Well, I think that the TCFD, the Climate and Financial Disclosures Task Team, have got a framework, and I think that there's a lot has been done to align with those disclosures and that disclosure framework. And I think, Investec is a case in point here, because they have disclosed their loan book and the exposure to the fossil fuel sectors. So now the other banks need to do the same, and I think that they will. It's not a race to the top, but it's better for the market if there's better disclosure and more transparency. So I think that the TCFDs are that's a good framework. And on the ESG side, I think that companies just need to know and understand who their stakeholders are. The stakeholders are not just the shareholders, the regulators, the labor force, the communities in which they have a presence and a profile. These all need to be considered and very carefully. So a lot of the bigger companies have a corporate affairs or stakeholder affairs executive, and that is their primary role. You can also get, media analysis and social media reports, and companies who can in real time gauge the sentiment. That's not really the case for smaller companies. Small to medium enterprises generally don't have that big a following, etc. So it's much more of a large company type of tactic. And then on the third question around other issues, shareholder activism is really around those two categories. But there are stakeholder activists along other issues. For example, the Center for Environmental Rights is very active in terms of publishing reports on health, water, carbon emissions, etc. So these things are very topical. It's just that it's appealing and relevant to a different stakeholder group. My expertise or let me say my experience is more towards the shareholder and investor type of activism, but I have been involved in quite a bit of other stakeholder issues, and in the mining world they are very varied. For example, if you want to move mining operations, and there's people nearby or on the land, you need to observe health and safety standards to the letter. Sometimes you need to move communities. It's not an easy thing to do. Sometimes you need to move ancestral burial grounds. These are very emotional issues, and they run deep. They've got nothing to do with the shareholders. The shareholders are focused on other things, but it's very important for that community and their ancestral land, and they need to be dealt with in their own language with a community liaison officer, and they need to, and the company needs to be very sensitive as to what the needs and the beliefs of that community are. So it's not that stakeholders are not concerned and active. They are very much along other hot topics and issues. It's just that most of my experience is in the shareholder and the investor landscape. And I'm just going to pause there for a little while.
Thanks for that, Jacques. Frick, do you want to? I know there was a follow-up on that as well. Do you want to talk to that, or can?
Yes, I think so, because I think it touches on what Jacques has said. And the question is basically how frequently should, specifically Jacques is not on stakeholders, but on shareholders. How frequently should shareholders be engaged, and how does the shareholder engagement process begin? What are the benefits and the opportunities that can result from such an engagement with shareholders?
Jacques, and while you're thinking about that, I think it's actually, touches on something that I wanted to raise as well. And I think what we also have to understand that we start, and I think we must assume and take it, that we actually start with quite a big trust deficit. I think, you have to, unfortunately, we need to start there and understand that, let me steal Coronation's trademark slogan of trust is earned. That for me, it's number one, there's still a lot of question mark around, we see the window dressing going on. This afternoon I have a meeting of the King Committee again, and we are working in the King Committee on putting at some point in time a paper out on the lessons learned from the corporate failures. And one of the notes that I just saw in our sort of meeting pack for this afternoon is, for example, reference to the fact that the annual reports of these companies and their reporting, you cannot fault. And yet, when you then start digging into it, you actually see that, it was more the window dressing and the credibility. So we do not have legitimacy. I think that's, for me, one of the things that we need to, and we So we've got to, you made the point that we're still too traditional in our approach. We need to start thinking out of the box. We need to start, thinking relationships. How do we engage? Or how do we also use our social media platforms, and, to engage and communicate? John Maxwell says, speak the truth, transparency breeds legitimacy. And it's this issue around, for me, that we have this once a year integrated annual report, which few people actually read. In my opinion, it's time that we really start thinking differently about how we engage. But just want to make another point that I want you to comment on as well. The reality also that we've got to understand is that you're never going to be able to keep all your stakeholders happy. Sometimes you've got to make a call, and you've got to make it. At the end of the day, we have to do what's in the best interest of the long-term sustainability of this business. If an Exxaro, for example, decides that it now has to invest a lot of money into a new technology or whatever, so that it can reduce its impact on the environment, and et cetera, that's going to mean there's going to be less money in the pockets of shareholders for a long time, because the cash has to stay in the business. If we want to have an Exxaro in another 20 or 30 years from now, but that may not necessarily be on, very high on the agenda of an investor who wants a return on his investment in 5 years, and not only in 20 or 30 years. So we have to be realistic. But I think the more you engage, the more you communicate, the more you explain these different, sometimes conflicting interests that we need to weigh up and look at. That's where I think we can hopefully start building some level of legitimacy with all our stakeholders, including our shareholders.
100%, Anna-Marie. I'm totally aligned with what you just said. Let's start with the trust deficit and just unpack that a little bit, because these corporate failures, and there have been many, and local corporate failures, there have been several high-profile corporate failures in Europe, even quite recently, and you have to then call in to question the role of the auditors, the role of the rating agencies, the role of the executives and the directors as well, and these are things that need to up their game. I mean, I don't think there's one of the big four auditors that doesn't have some kind of reputation issue going on in the world somewhere. I draw your reference to a case in Germany where there was a company called Wirecard, and EY was the auditor there, and it's turned out to be the biggest corporate fraud in European history, something to the effect of 250 billion euros. And the question is, why did EY not pick it up? And the same thing, locally. I mean, there've been, besides Steinhoff, there've been a number of corporate failures, and this has led to a rise in activism, where the shareholder activists are asking the questions of the directors. Have you interrogated these numbers sufficiently? Do you know what's going on in your divisions? And do you know what's going on in the companies that you've actually acquired? These are very important facts that the boards should be on top of their game. The rating agencies, because that's my background as well. Before the global financial crisis, the rating agencies were rating all these structured products, RMBS, ABS, CDOs, CDOs squared, CDOs cubed, etc. And it all ended. We know the rest is history. I mean, it ended very badly for the whole world. Billions and trillions were wiped off stock markets. But the sort of the negative that was lodged against the rating agencies was, why didn't you pick these things up, and why did you rate them AAA when actually they were should have been C rated? And they always defend it on the American First Amendment, which is freedom of speech. You know, they assess the risk, and then they provide that risk to the market, and the market must then make its own assessment and make up its own mind. And I don't think they've lost a case. But the thing is that they were very slow to respond and to downgrade and to rate according to the actual risk. So they've also come in for flack. Your point about the non-executive directors is an interesting one, because I've heard for the last 3 years, I've heard questions by very sort of probing investors into the constitution of the boards and whether the boards have sufficient skill to interrogate the numbers that are coming before them, and to interrogate the information and the data that is being presented to them in their board packs. You know, do they actually go into the operations to understand what that company is all about? And are they well equipped to chair the committees that they are chairing? And do they interrogate beyond what lands on the desk in front of them? So that's a key thing. There's no doubt that the trust deficit in corporate South Africa has led to the rise in shareholder activism. But I think that is on balance a good thing, because it's the auditors, the rating agencies, the boards themselves are have not been sufficient to prevent these corporate failures. You can think of Tongaat Hewlett, EOH. There are many scenarios in South Africa where, had there been more active shareholder inquiries and probing, that some of these things would have been discovered earlier and there might have been a different outcome. But that depends on the response from the company. I mean, the regulators typically get in after the corporate has failed. And by that time, are they going to recover the money? Well, they might recover some, but a lot of the time it's too little too late. So when the share price is on a steep trajectory, that is when the shareholder activists should be taken more seriously. Is this sustainable over a period of a longer term? Companies like Old Mutual, and there's a guy called Robert Lewinson who's running that ESG unit very effectively, I believe. They have a stewardship code, and what they tend to do is if they have mandated, let's say, 10 asset managers to manage some of their money, they will raise a question or a resolution on a particular topic, and they will what they call crowd in those 10 asset managers, so that the silent majority of that investment pool is then raised to the surface, and the company needs to take that very seriously. The role of the integrated annual report, while it's compulsory to produce the report, and there are really clear guidelines as to what needs to be reported, it needs to go beyond that. So I believe that engagement with shareholders, not necessarily all activists, but with shareholders, is imperative. The days of the rubber stamping of resolutions and carte blanche approvals on how the boards are running companies, I believe that those days are over. And I believe that's a good thing, because the more activism and the more of the right type of questions and the right type of responses, the less corporate failures are likely to occur. The annual report is is not sufficient. I agree with you, Anna-Marie. I think the IAR is a necessary disclosure platform, and companies in South Africa generally tend to do good integrated annual reports and to disclose relatively well. But the question then arises as to, are they actually, doing what they say they're doing? And that's where the activism can play a role, and the company needs to respond to that. So there are some specialist agencies very active in that space, and I've worked with some of them because we're a very collaborative organization, and it's quite an art and a skill when you have different stakeholders in the room looking for different outcomes and asking different types of questions. And it's a very different an art and a skill to try and synthesize those and to come up with scenarios and outputs from the company that can take those as inputs and turn them into strategic documents and reporting that give the various stakeholders what they need according to their relevant topics. So, I mean, you mentioned the social media and that transparency breeds legitimacy. And how do you get started to reduce this trust deficit? Well, I mean, I know that some of your Fluid Rock company secretaries that I work with are on this call. And I've worked with them very effectively in terms of engaging with small pockets of investors that are really not the large institutions. But you can deal with them quite easily because they are typically not aggressive when they reach out to engage. They it only turns sort of aggressive and hostile when the company refuses to engage or sort of runs interference in the engagement. And then it becomes prickly and can become nasty. But generally speaking, the tactics that a shareholder like Ian Logan, who's been in the market for a long time, is very experienced. Chris Logan. Chris Logan from Opportune. He says that shareholder activists, no matter how small, can raise issues, and any two shareholders can put together a matter that the board should address, or that could become a resolution on votable shareholder matters. Now, the way that activist, the way that Chris typically engages is that he does his homework and he doesn't try and catch the company out. He doesn't try and put them in a corner or to, put them in a box where they have to come out swinging and fighting. So he always provides either an alternative or a potential solution, and that should be taken seriously. And with that, the company can then consider its response and decide. Like I said before, it's very seldom that an activist approaches a company on a matter that they haven't thought about. A totally new matter out of left field is almost impossible to imagine, because the executives are living and breathing and doing these things in that particular company every day and all day. And often it's it's a theme that is recurring. So it's good to engage. It's good to hear. I personally have received emails of suggestions around aligning shareholder and management interests in setting up a share scheme and metrics, key performance indicators for management. And that advice is actually very valuable. It's a constructive contribution. The same investor who shared that with me was dealt with very poorly by a capital equipment company and an AGM that went south very quickly not so long ago. And it went south because they engaged in the wrong way, and they knee-jerked and blocked and ran interference and didn't listen. Basically, they want to be heard, and they just want to know what the company is doing about a particular issue and what the considerations are, and it's perfectly rational and reasonable, and the company should engage like that.
Jacques, I'm going to come in here because we are starting to run out of time. And I mean, this is a topic that we can continue. There's so many real life examples. I'm going to ask Frick to close off for us. But I think, you know, just from me, some of the things that I also would like, you know, take away from this is, number one, I would really like to encourage our audience as well. Go and look at that. You know, when you look at the King report, we often just stop at, you know, the areas around, well, how the board should function. Do yourself a favor, go and read the section around stakeholder engagement. There's some real valuable practical recommendations in there. Make sure that stakeholder engagement becomes a standing item on the agenda of the board with proper airtime, you know, with facilitated discussion around that. Have scenario planning because, you know, I think life happens and we can do it with the best intent in the world. Things do go wrong. So we need to be prepared, you know, we need to have that kind of crisis management. What will we do if all of a sudden a stakeholder activist for sometimes the wrong reason comes in and you know, catches us off guard? Understand that you've got to communicate, that you have to build trust. And if you have that legitimacy, even when things do go wrong, I am quite confident that you can safely take your ship through that storm because you have taken the time to engage and respect your various stakeholders. To me, I think that is key. Frick, I don't know whether you've got one or two final observations as well.
No, I think we've said it all. What I just take from this is that there's a shift from the shareholder activism to more stakeholder activism, and they present themselves in the form of the governance stream and the more economic stream, and it's upon boards to do the basic thing and get the right skills on board, but be proactive and think through their stakeholders and do a stakeholder analysis and what their needs are, and then proactively and constructively engage with them so that you don't have this kind of animosity in the process, and both you have a win on both parts. But thank you so much for that, Jacques.
Thank you from my side as well, Jacques. Thanks for your time. Frick, thank you for this year, for co-hosting these Directors' Hours with me. It was a privilege to share the stage with you. Thank you to everybody. Just a last point for interest, IFRS have just recently published a consultation paper on sustainability reporting. So for those of you asking questions about reporting, it's open for, I think, for public comment until the end of December. Go and have a look at the IFRS website. You may find it there. Wishing all of our attendees a great end to the year. Have a wonderful festive season, and may 2021 be as interesting as 2020. Thank you so much from Vloot, from the Stellenbosch Graduate Institute, for your attendance. Have a great afternoon, everybody.
Thank you so much.